Welcome back guys to another Zero DTE video, and today Coach Ernie is going to be talking about volume profile, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description to find Coach Ernie's school community. Enjoy guys.
So I had a question about the levels. I don't know if this is true or not, but like the lines, they're never going to be even when you're marking them up in the volume profile, right? They're not going to be like evenly spaced out. So I was looking at them and I noticed like some lines when they're closer together and some lines they're further apart. Is there a difference in behavior where those areas are? For example, is there like a different behavior for price action when the price action reaches a more compressed, more dense lines compared to the lines that are more spaced out? Is there a difference in behavior or no, not really?
I would say that the minimum spacing on the SPX is somewhere between 10 and 20, right? But I haven't noticed that because they're closer together, that makes any difference between they're further apart. It typically means that if they're further apart, that's an area of low liquidity. Unless it's inside of a volume node, then that it means it's super high liquidity. If it's in a volume, that's an indication of much lower liquidity. There's a good chance the price is going to move very fast. If they're close together, it means that there could still be relative low liquidity, but there's going to be a lot more levels of influence as it's moving through that liquidity. Liquidity is all relative, of course, and there are some places where it's just super low and big gaps. That's because the market just trended violently through that area and just didn't lay down any volume. And so when you get back to those areas, you can't expect there to be a lot of lines in there because there wasn't much volume placed. But let's just look at different things. Now, this is the part that I think is really interesting, is just examining that volume profile and the relative difference. So you look at areas like up here between 59.90 and 60.71 is just a huge gap of volume there. But in between is all kinds of frothiness.
Or noise or whatever you want to call it. Yeah.
Yeah. But then you look at something like this and there's not so much. There's hardly anything.
And it's just as deep.
Yeah.
It's even deeper. Yeah, it's deeper.
And same thing with this one right here. Much deeper, but very little stuff going on. This is where price is going to really move. Over here, it can move, but it's going to have lots of roadblocks as it goes along.
Gotcha. Okay. That makes sense.
But then you have these deep crevices here. These always amaze me at 5,800. I look at that and I say, man, what is it about that level that everyone has decided that's a no-go area? But it's there and we're very close to it.
Interesting.
This is like that too, right there at 59.15. Not quite as deep, but still pretty deep. The difference in volume between these areas is really stark. You can see where the market has temporarily found value and where it hasn't, and then other places where it's undecided.
Thanks for watching guys, I hope you enjoyed the video, and if you did, make sure you hit the subscribe button and the like button below. If you're interested in becoming a pro trader, remember to check out the link in the description for Ernie's school community.